Welcome to The Explainer. Today, we're decoding the hidden mechanisms that are keeping your digital finances secure. We're going to unpack a massive, fundamental shift in exactly how financial institutions are being commanded to protect your assets in our hyper-connected world. So think about it. How safe is your money when it's just ones and zeros? Let's dive right in and explore what is actively protecting your daily digital transactions from completely invisible threats. Because every single time you tap your phone to pay for groceries or transfer funds across the globe, there is a sprawling, hidden architecture working overtime to make sure that transaction is safe. We honestly rarely think about it, but the security demands on these systems are just staggering. To understand how this works, we're actually cracking open a pretty dense 50-page regulatory document from the National Bank of Cambodia. It's the Technology and Cyber Risk Management Guidelines, and it's scheduled to go into full effect by January 2026. We can basically think of this document as a blueprint for building a digital fortress because it sets the absolute strict rules that banks must follow to safeguard our digital ecosystem against some seriously fast-evolving cyber threats. Here is our blueprint for today. We'll quickly cover Cambodia's digital banking vision, the IT governance foundation, what's happening behind the scenes, the frontline cybersecurity defenses, how they protect your digital services, and finally, how they're preparing for future tech.
All right, part one, Cambodia's digital banking vision and building a vibrant digital economy.
Driven by the government's pentagonal strategy, Cambodia is going all in on digitalization. The goal is to create a truly vibrant digital economy and society. And obviously, financial institutions are right at the front of this, using innovative tech to speed up economic growth and just make customer service better. But as you can imagine, this digital transformation drastically increases exposure to cyber risks. Banks can't just innovate for the sake of it anymore. They have to stay hyper-vigilant. They're mandated to build robust controls to proactively fight off threats and create a highly secure tech ecosystem. Moving on to part two, the foundation, IT governance and building accountability. Every fortress needs a rock-solid base, right? For banks, that's built on 4 pillars: strong board support, a defined organizational structure, robust processes, and sustained management commitment. What's really fascinating here is the structural mandate itself. Banks are now explicitly required to have a Chief Information Security Officer, or a CISO. This means cybersecurity is no longer just some IT subdepartment. It actually has a dedicated leader with a seat at the executive table. It completely ensures that the security architecture aligns with the business goals and creates real, genuine transparency. Let's look at part 3, securing behind the scenes, specifically data center resiliency. If we take a walk inside the walls of this fortress, we see that banks have to protect physical servers with heavy-duty backup generators, biometric locks, and alarms. But simultaneously, they're securing digital backups against data loss. The rules mandate at least one primary data center physically located in Cambodia, and it has to be fortified against natural and man-made threats based on intense risk assessments. We're talking redundant cooling systems and uninterruptible power supplies. Concurrently, they have to run highly secure digital backup procedures and test them constantly. That way, if a physical location is compromised, the digital data remains completely intact and recoverable at a secondary disaster recovery site. But let's be real. What happens when things inevitably go wrong? Well, banks rely on strict incident management. The guidelines require a formal cyber incident playbook. It dictates the exact steps an incident response team takes to detect, contain, eradicate, and recover from a threat. And they can't just write this plan and let it collect dust on a shelf. They are literally mandated to simulate cyber events to make absolutely sure their response times hit very strict recovery objectives. Which brings us to part 4, frontline cybersecurity defenses. These are the active guards of the bank. It's super interesting that data has to be encrypted, whether it's just sitting quietly on a server or actively flying across a network. The mandate forces institutions to use industry-standard encryption for sensitive data in both states, so data at rest on databases and data in transit, moving across the web. They also have to use techniques like data masking, anonymization, and tokenization. Basically, your financial data is wrapped in virtual armor, so even if a hacker intercepts it, it's just a bunch of unreadable gibberish to them. Now, to test these guards, the guidelines mandate adversarial attack simulations. So beyond strict access controls and endpoint detection, banks have to do regular vulnerability scanning and penetration testing, but they take it a step further with red team exercises. This means banks literally have to pay expert hackers to simulate real-world cyber attacks against their own fortress. They attack the systems in real time to find and patch weak spots before the actual bad guys get a chance to exploit them. All right, part 5, protecting your digital services. This is all about securing the actual gates you use. At the gates of the fortress, like the services you use every single day, the security splits into physical and digital. The physical ATM requires PIN shields, tamper-resistant keypads, and anti-skimming devices to stop criminals from stealing your physical card details. But contrast that with your mobile banking app. The app relies on digital walls. It uses web application firewalls to block denial of service attacks and employs code obfuscation, which essentially scrambles the app's underlying code so hackers can't reverse engineer it or run it on compromised rooted phones. You know when you get that sometimes annoying OTP text message or a transaction alert for a big transfer? Well, these specific rules are the exact reason why. The guidelines force banks to implement multi-factor authentication. You have to provide something you know, like a password, something you have, like your phone, or something you are, like your fingerprint. Plus, they have to use robust fraud detection systems that constantly monitor for unusual behavior. If the system detects an anomaly based on your usual habits, it flags the transaction and demands extra authorization before letting the money move. Finally, part 6, preparing for future tech and emerging technologies. Looking to the horizon, banks are heavily utilizing global cloud networks to innovate and scale. But they are strictly required to have an exit strategy to prevent vendor lock-in. They can't just blindly hand over the keys to a cloud provider and hope for the best. The guidelines mandate a really clear shared responsibility model. If a massive provider goes down or unfavorably changes its terms, the bank must have a documented, tested plan to immediately move to an alternative provider or migrate the data back in-house to avoid major business disruptions.
Okay, we need to talk about something kind of terrifying. It's called a harvest now, decrypt later attack. Essentially, hackers are stealing highly encrypted data today, knowing they can't read it yet, just to hoard it until future quantum computers become powerful enough to crack the encryption. We are genuinely looking at a near future where quantum computing could easily break the public key cryptographic algorithms that our entire internet relies on right now. Cybercriminals know this, so they're proactively harvesting everything they can get their hands on.
To fight this, the guidelines say banks have to start preparing right now. They cannot wait until the threat is actually here. By the 2026 deadline, banks must develop a post-quantum cryptography migration roadmap. This means they have to identify which data is at risk today, upskill their staff, and start implementing cryptographic agility. Basically, they need to design their systems in a way that lets them seamlessly swap out old encryption standards for new, quantum-safe algorithms without breaking the whole bank in the process. After seeing the immense blueprint required to protect your money, from massive physical data centers all the way to complex post-quantum cryptography, it's clear that financial institutions are building some incredible digital fortresses. But ultimately, you hold the keys to the front gate. So I want to leave you with this to think about. Are your personal digital habits as resilient as the systems protecting your assets? Thanks so much for joining me for this explainer.